So for the sake of everybody's time, I know, of course, you're getting continuing ed, so we want to be really respectful and keep it just to a 1 hour. I'll just kind of introduce ourselves and Chris really quickly. Been a long time member of AIA, going about 12 years or so, and uh, Chris is really the expert here, and he's going to be giving the presentation today. Just want to thank you guys for attending, and since it's going to be a small group, please make this interactive. So if you have questions or you have something that is important to you, we love to personalize this and make that really about what's of interest. So please feel free to chime in anytime, and I'll turn it over to Chris. And thank you, Chris, as well for giving this presentation, and to the AIA as well for of course your support, and thank you guys very much.
Thank you.
Yes, appreciate that, Sam. So today, right, we're still continuing on our lecture series. I'm not sure if anyone had a chance to listen to the recording from the last time we did it, or I don't recognize that anyone came. That was we did it a couple months ago at the AIA office. So, we knew the people who were there in person. I know there were some people joining online. Did anyone get a chance to listen to the other presentation we did on the business of architecture part 1?
No, actually, sorry. Can I at the end maybe get a link to it, or is it easy to find?
I don't believe we posted it publicly, but I'll take your name down. That was Anton, right?
Right.
Yeah, okay. Yeah,
Thank you.
I don't think we have it on YouTube or anything.
Oh, okay. Thank you.
Yeah, I'd be interested to hear as well. Hear the first part.
Great. So, a lot of it, we had a knowledge expert, a local CPA join us, Charles Au, and we had a chance to talk really more specifically on some tax planning ideas at the end of 2022 tax filing year. Of course, we're in extension filing at this point, but really more thinking not just about last year, but thinking about this year. But this year is already halfway gone, so we really should be thinking about next year already, right? So a lot of what you'll notice is we're always looking to figure out how can we add the most value to you guys, the topics that are most relevant, the strategies and ideas that would apply most to your situation. So today, what we had in mind was just taking a quick look at cash flow and systems, and that becomes a core of what all families and businesses need to deal with, is how does money flow in and out. And for many of us, right, it's a new concept when we first got into the business or into the profession. Not something commonly taught in undergrad or professional school or high school. So just a little background about the company, right? Sam mentioned we're a local financial planning company. We have had great success over the last 16 years. We've been around. We've been fortunate enough to expand to the mainland. So we do have presence all across the West Coast physically. So we have 3 main offices in California. San Diego is now our home office, now that our mainland operation has grown so much. We have Scottsdale, Arizona, Missoula, Montana, Las Vegas, a couple satellite offices in Washington State, Texas, Florida, Wyoming. And so we cover quite a bit of territory now. We have about 160 advisors, another 70 full-time staff that supports us. And so we always came in with the vision of understanding what it was like to be small business owners, the challenges involved with it, and ultimately what are the solutions and strategies to either look forward to or to implement now that would better our situation. So we serve approximately 35,000 clients across all different states, and it's something that we attest all of our success to, is that people find value in the planning and the work that we do for the community. So just a couple of disclosures and disclaimers. Sam and I are financial advisors, so we can offer investment advice and things like that. But today really is just more informational. Please don't take anything we say as legal, tax, or financial advice without first consulting your professionals and really taking a look at your specific situation. So as Sam mentioned, today is really more about what you guys want to learn about and hear about, questions that you have. We did come up with just a brief list of agenda items we want to make sure to cover today, and it probably will encompass some of the things that you have. But before we start, was there any specific questions that you guys had about business, finances, cash flow, taxes, opportunities to start things off? And if not, right, perhaps I'll throw back a question first, and I just get, it helps for me to understand just the lay of the land, where you guys are at. Do all of you guys own your own practice, your own business, or? And then if you want to give like a thumbs up or a chat in the chat box for those I can't see. So I just want to make sure. So Jack, Mike, you guys have your own practice? Okay.
Yes, I do.
Okay. And then who has business partners in their practice? Does anyone have a business partner in their practice?
I do as well.
Okay. All right. So that's helpful, right? So, one of the things that we want to observe is that small businesses really make the economy of Hawaii move along, right? There's very few big businesses in Hawaii, and other than government and healthcare, right? The rest really comes from the small business owners. And so when we look at the statistics from 2022 year end, right? There's about, in the state of Hawaii alone, since we're in Hawaii, there's about 140,000 small business, of which that makes up the large percentage, basically all of it, 99+% are small business. And of all the employees out there, that they employ half of all the employees in the state of Hawaii. So these are some really large percentages we're talking about here. And so when we're looking at just in the trades in Hawaii, of those 140,000 businesses, the main thing I wanted to focus on here is that when we're looking at businesses less than 20 employees, you can see here at the bottom, it virtually makes up the vast majority of all businesses, right? There is only, not even 3,500 businesses that have over 20 employees. So this is the realm in which we understand that a lot of planning opportunities are going to be available, because we're in this unique situation where we are navigating our personal finances, and this is for business growth, business scale, potentially business exit at some point is what many of us should consider, right? But at the same time, our business finances must also sustain our families and help us pay all the bills that we need to, and pay for our employees, and allow us to do the business that we do, which feeds back to our personal economy. So understanding this gray area in between is really the area that we've dedicated our practice in focusing on for our clients. So that's the area, and we have to understand that it's going to be on all of the sides, right? Some things are purely business, some things are purely personal, and then there's all the things in between. So this is where we see the most planning opportunities, when we recognize this. And, this is where I'm pretty sure all of you guys have heard some saying along these lines, right? Is at some point, many of us want to figure out, how do we work, on the business, not just in the business, right? We don't want to just simply employ ourselves. We ultimately want to know that we can step away for certain periods of time, take care of family, go on a vacation, and that ideally not everything comes to a halt in our business. And so that's really where this idea and this conversation that we want to talk about today about systems and cash flow comes up, because ultimately it's the cash flow that allows us to be able to get to that point where we can work on the business and not just in the business. I take a quick pause there. Any questions or thoughts, comments up until this point? Okay. So one of the first ways we know that people are able to discover this clarity in their situation is really building themselves this team of advisors over time that consults them on many different areas. And you guys see this in what you guys do, right? As an architect, you provide a professional service in a very specific part of, for example, building a building or building a house, right? But the reality is we must also coordinate with engineers, the general contractors, the builders, the electricians, and plumbers, and all the rest to make sure that all of this actually happens. And we see this the same way in every single person's financial world. So if we're looking at their personal financial situation, oftentimes what we see is a lot of people will focus on the blue and the red, right? What I have, what I owe. The business is definitely, as you can see there, the business and business debt that might be there ultimately does flow back to you as a small business owner, to your own personal balance sheet many times, not always, but for most of us it does. And so what we can appreciate looking at this is that we start to lean on many different specialists in different areas of our financial life in order to make sure that we're making the best decisions possible at the top, right? If you're sued, this can be the errors and omissions and professional liability, right? But also on the same side, you might have your homeowner's insurance, your car insurance. If you get sick or hurt, you need the health insurance. Maybe you have some long-term care LTC insurance, or if you get sick or hurt, how are you going to continue to pay the bills in your will and trust estate planning, right? You need to go see an estate planning attorney, ideally, to make sure it's written the way that you want it, and so on and so forth. We have all these different professionals who help us in all these different aspects of our financial world. And our question is just always, who's that chief financial officer for you, making sure they're all giving you the best and optimal advice for your specific situation. And when people normally that we come across pause to think about it, usually they find that person is themselves, right? So not only are they working in their business, they're working on their business, but they're also left to figure out, is all the information I'm gathering from the trusted professionals that I employ to help me with my situation, are they also all doing the best thing for my interest? And what we know is that time becomes this very precious commodity for people. And that's when people start leaning on us to say, hey, how do I have almost like this personal chief financial officer to sometimes literally, but at the very least figuratively, get all of these people on the same page together, because financial decisions will have impacts in other areas, right? If you make a financial driven decision, it may have tax implications and legal consequences. Same thing if you do something purely from a tax decision, that might have legal consequences. You may or may not be able to do it. And at the same time, it can impact you financially, hopefully in the positive, and so on and so forth. So we end up finding ourselves in this tug of war of a decision in one area of our business or our personal financial situation will affect other areas, right? Simple things like if I pay down my business debt or my mortgage down faster, what am I giving up by doing that, right? What other opportunities may I be missing out? It doesn't mean it's right or wrong or good or bad. It just means, do we understand the impact of the decision that we're making? And with that information, is it still what we think is best for ourselves, our business, and our family? So this coordination is something that we always want to make sure that we uh, just take a look at and go from there. Now, when we look at what makes successful um, businesses thrive, we see these six must-dos, right? So for many of them, right, they have key people that help their practice keep running, whether it's the manager, things like that. Sometimes we're solo man operations and we rely on subcontractors, right? So having some sort of great sales team oftentimes ends up being that. Having the correct systems, process procedures in place so it's plug and play and easy to continue to work towards. As I mentioned before, right? Having that team of advisors working with you. And then, as I mentioned, working on your business so that we can always go with the end goal in mind. So those are those six key must-dos. And so, as we're looking at those, when we're thinking about systems and cash flow, one of the first things in any financial planning that people have to address is what would cause my practice to come to just a halt, right? Where we can't move forward, whether it's for legal reasons, whether it's because of an injury or illness, whether it's because something happens and a business partner is no longer around, or they go through a lawsuit, or your business partner goes through a divorce, or passes away prematurely. If you have a key associate or key employee who is no longer around in the practice, so what do we do in those situations? And oftentimes there's very simple ways we can address it, but we have to just pause for a second and take a look at what are those risks that we face in our business. And some of it is out of our control, and we have to recognize that, right? Legislature, tax changes. In our discussion in part one, one of the questions that came up was the research and development tax credit that some of the architecture firms were really leaning on to mitigate the tax outlay that they had to pay so they could reinvest it back into their business. And with the new language in the proposals and some laws that were passed, it made it ambiguous as to what sort of consequence this would have. Now, we can only control the things that we can control in our situation. So that is going to be something where we want to make sure that we address those. And if you haven't had someone take a look and give you just an honest assessment about where there may be some deficiencies or where areas are being taken care of in an extremely optimal fashion, it's always helpful for the people that we meet to be able to move on from there. So again, if you don't have anyone that's helping you with that, we're always happy to take a look at it. We're here to take a look at what you have on the personal side, the business side. Are you optimally protected, to be able to go from there? Any questions, thoughts, comments on that? Okay. So when we start thinking about cash flow and outflows and the systems we have around it, this is where there should be a lot of clarity, and where we find some struggles with some of the people that we meet is that we go through this exercise for our practice, going through this profit and loss statement, balance sheet statement. We need to provide it to our CPA. Sometimes we're not very clear also on exactly how important it is, or monitoring what is a reasonable expense for payroll, for example, or what's a reasonable expense for marketing. And there are going to be some rough guidelines. Every practice is going to be different in the way they can conduct their business, but it's always great to just have an idea of what a ballpark idea would be, right? Are we reinvesting enough back into the practice? Do we need to leverage debt or borrow from ourselves personally to reinvest back into our practice for business growth, business exit strategy in the future? And so the way that we take a look at this, right, is monitoring what we actually have in place. And it always comes down to systems and a process. Even when you're doing a profit and loss statement, for example, typically most people are going to use some form of a QuickBooks accounting payroll system that allows them to keep track of everything. Again, we always go back and feed this information back to this. They call it LBS, but it stands for Living Balance Sheet. It's a software planning tool that we use for each of our clients, both for their personal finances as well as their business. I'll show a demo of it, kind of concluding after this. But managing that cash flow is extremely important, because once that feeds to your personal side, at least understanding, a lot of times we're burying a lot of maybe some personal expenses into it. And so we have to figure out what's the best way to manage that. So that's what we're looking at when we're creating systems and cash flow and taking a look at that. Now, one of the biggest sources of cash outflow that we all face, of course, is going to be some form of taxes, right? And when we look at taxes and sources of tax revenue that the government makes, right, it might look something like this based on the budget that they have from 2019. So when we're taking a look at the fact that they make up half of their revenue from income taxes and then over a third of the revenue from payroll taxes, we can also see and appreciate that, we hear about this corporate tax, but it's actually a very, very small percentage of where um, the federal government gets their revenue source from. And then there's all those excise and other miscellaneous taxes like estate taxes that fit into a small sliver as well. So when we're observing where is the money going, and we take a look at arguably one of the biggest line items, it's going to be taxes. And so then that brings us to question as to what are the ways that we can manage our cash flow for tax purposes. How do we mitigate that? Again, we'll send that link where we talked a little bit more in detail about it, but just as a brief summary, since I know most of us, I don't think we're there. We take a look at it from 4 major ways that people start thinking about their tax planning and how to mitigate these outflows when it comes to taxes, right? So the number one thing that's simplest that people can do is how they choose to be taxed as an entity, right? So some people have an LLC and they're filing as a Schedule C, sole proprietorship. Some people have no LLC and they just file a Schedule C just on their personal tax return. And so there are consequences to that, right? There's limited legal protection, everything. The big tax planning opportunity with that really does have to do with the self-employment and payroll taxes. There's a lot of creative ways where ideally we want to limit that. Payroll, self-employment taxes, employee pays 7.65%, and the employer pays 7.65%. So it's about 15.5% straight to payroll taxes. When we're thinking about more income taxes, then we start thinking about these other 3 concepts listed below: income shifting, in order to manage the effective tax rates. How do we also income shift if we're ever going to do an exit, right? So I'll show a small little example of how there can be a lot of efficiencies in the cash flow, how money flows through a business to a seller or the new owner to the seller. And also there's the deductions and depreciation that we can take. We also talked about tax credits. Those can be fairly limited, but again, the taxes and depreciation expenses we can take on the business. And then lastly, and oftentimes another very simple tool that people can use is tax deferral. And that typically would most easily come from some sort of retirement plan selection, right? Some people just do an IRA. Some people look at a simple IRA. Other people look at a SEP IRA or a 401k plan or a pension plan. And how do we determine what's best for you? Because there are consequences. I was talking with one of the architect business owners earlier today, and they wanted to max out their SEP IRA at $60,000 for last year, but they didn't have the $60,000 yet. Now they have until September, October to make that contribution for last year, and it would reduce their taxes by roughly half. So of the 60,000, they would only have to pay 30. They would save $30,000 in taxes today, but they still need the $60,000 to contribute to the retirement plan. But if they don't have the money, one of the suggestions we make sometimes is maybe we just can't contribute to the retirement plan. So yes, our taxes will be higher, but we also don't need to come up with $60,000 that we don't have. Why don't we just pay the $30,000 in taxes if we really cannot get the 60, and just move on from there and restructure our cash flow? So there's always going to be these consequences each way we move. And we just have to figure out what's the best decision in the current situation that we're at. It may be that they just take out a loan from somewhere, they liquidate something from somewhere else, or take out from their emergency fund if they're able to, but sometimes they're not able to. And so we have to take a look at what option works best. Take a pause there on tax planning opportunities. Does anyone have any other questions or thoughts when it comes to taxes, tax planning? Okay. So right. So when we start looking at transfer of balance sheets, right? Now this is where we're going to evaluate all those decisions. I'll show, I think this is a good segue now to be able to show you, how we execute on this with clients in order to be able to show them how utilizing, 1 second, switch to this window will look like. So I mentioned the living balance sheet. And this is, again, something that we're happy to set up with you, learn more about your situation so you can understand where there may be areas of opportunity or deficiency in the situation. Let's see. So on the business side, it would look something like this, right? So we have to observe that there are the assets in the business, and they may come in many different forms. For some practices, it may be simpler. For some, it may be more complex. And at the same time, right, there are some liabilities, whether payables, a business loan, things like that. And then we also have to make sure we've done the best that we can, especially when there's employees involved, partners involved. What are we doing to retain and attract the right talent for our practice? Because that is something that we've constantly heard, even before the pandemic, and probably more so after the pandemic. One of the largest struggles that many of the practices and businesses face is the turnover of employees. How do we continue to add value to them? And how do we not only add value to them, but how do we communicate the value to them? Because as the business owners, we don't always get a chance to talk to them and tell them about all why being with us is so great and all the benefits we provide for us, right? And that's usually something that we end up doing for a lot of our clients as we take care of them, and we become another resource for the employees to make sure that their financial struggles are ideally mitigated as much as possible so that they don't bring that baggage into the workplace and have it become a less productive working environment. So taking a look at the business balance sheet is important as much as it is to, again, and I think we showed this earlier, which was the personal balance sheet. Where did my window go? Where we look at someone's personal balance sheet and where their business may fall in that. And then this allows us, again, to best understand how do we manage the taxes? How do we manage the scale, the growth, the challenges? And how do we continue to reinvest back into ourselves, the family, and the practice? So understanding the cash flow is that green area, both on the business and on the personal side, and they have to feed into each other. And that's the area where taking a closer look at what to do becomes very important from there. Now, as a highlight example of how this might work in a situation, and it may not be applicable to everyone, depending on the vision that you see for your practice and whether or not we're building it to be something that's able to be transferred to a family member or an outside third party. I came across a situation earlier this week where the nephew purchased a practice from their uncle, and the way that they went about it was a lot just they trust each other, their family, but they also put in some legal documents in place. And so let's take a quick peek about how these things can potentially impact things at a greater scale. So 1 second. Sorry, it logged me out while I was in it. Right, and I know that Marco and Sam have done presentations specifically on exit and transition planning, and that's where you can always revisit those. But just from a general high-level concept of how cash flow affects things, when we have a business, a buyer, and a seller as an example of looking at a cash flow case study, right? If the buyer were to buy from the seller, the most common way that we see people doing transactions in general, whether it's with a bank or anything, is the buyer is buying the practice for some dollar amount. In this example, it's $600,000. And in order for the buyer to pay the seller $600,000 in this example, for easy numbers, essentially the buyer has to earn $1 million, pay the taxes of 40% as an assumed rate in order to pay the 600,000. Now we're not talking about in 1 year, we're talking about maybe over 5 years, 6 years, 10 years. They have to draw out this $1 million in order to just pay the seller, and in this case, it was the uncle, $600,000. Now, that's not the only taxes involved in this though, right? Because the seller also has to pay some form of capital gains tax, long-term capital gains. And oftentimes we hear long-term capital gains is 20% federal, but we also have to remember there is state, 7.25%. And for anyone who reports, more than $200,000 to $250,000 of total income, this includes retirement income, pension income, earned income that they're earning right now. They also have to pay the net investment tax income, and that comes out to about another 4%, right? So when you add it all together, it comes out to like another 30%. So, this starts showing that in order for the seller to receive $420,000 cash flow wise, we need to create $1 million of revenue and net earnings in order for the seller to get 420. When we do the math on that, that's a 58% wastage of dollars that could have stayed in the family or could have stayed in the practice or the business. And so this is perhaps a large example of a easy way to take a look at how cash flow and managing this becomes really effective. So, what we would say is the ideal way is to take a look at other strategy, other options in order to consider this. So maybe instead of $600,000 purchase price, what if there was a $500,000 purchase price and a purchase agreement? And the idea is, how do we still reach the same 420, or perhaps even more than 420, maybe 430 or 450, where at the end the seller or the uncle in this case can actually still be made whole. And that those are the types of solutions that we'd want to look at in your particular situation. This just applies specifically to a situation of selling, right? Because what we also have to understand is uncle wants to make sure he's taken care of. He wants to be able to retire and stay retired and not feel like he has to, go back and do some subcontracting work and everything. So this is a small example that hopefully can show some magnitude of how if we ignore cash flow and the systems and the approach that we take to things, it can definitely impact on a much greater scale. And oftentimes we look at it just from a annual or monthly or quarterly basis. But when we start cumulatively adding these things up over the course of 5 years, 10 years, what we start to understand is that there may be a lot of dollars going out of our pockets to other people's pockets. And so for us, we always want to make sure that we're managing this optimally as possible in order to do that. Any thoughts, questions on that? Okay. So, right, we've partnered together with AIA to make sure we are always continue to add some sort of value to you guys. When we talked a little bit about that roof over your business, roof over your financial house, that's where we want to make sure and take a look at things like if you get sick or hurt, what happens to your family, what happens to your practice, what happens to the earned income that you have. We do have a AIA Honolulu discount program for anyone who is interested in exploring more about income protection, not only for themselves personally, but for their business, right? Because what we can understand is for those who may have an office space and employees, that's a constant payroll, a constant expense, we can call it overhead expense for a business that will continue to occur until we make drastic changes in the practice or we get back to work fully. So there are ways we can address this very simply. Be happy to explore that for you. Again, there is a discount that is available for all AIA Honolulu participants. This also applies to your employees as well, and associates, not just the owners. And the other thing is when we're thinking about cash flow and managing, whether it's taxes, saving up for retirement in the future, things like that, we also do have a AIA Honolulu members 401k program where in many ways the goal is to almost be like the Costco of creating a retirement plan for you, right? Where ideally you can mitigate your fees, get better service, have better compliance, better management overall of your 401k or any retirement plan that you might have through your business or practice. And we're always happy to take a look. If you haven't revisited your current plan that you've had for a while, whether it's specifically on retirement or just in general on the business or your protection plan, we're always happy to come back, take a look, see what recommendations may come through. Let me hop back over to the slides here. And just offer you another analysis of where things are at. And, you know, if you'd like us to, we can work together to help build out your balance sheet. So then we can uncover ideally areas of where we can retain more of the cash flow, whether it's through taxes or where we're dedicating our resources, and to be able to go from there. So as Sam mentioned, you know, we want to be sensitive of the time. So we wanted to just leave some time for anyone who wants to hold back and ask some questions. You know, of course, if you have some specific questions about your specific situation, maybe it's best that we just do it offline and be able to see how we can best evaluate your options for you. Right. Sam, I don't know if there's anything else you wanted to add in closing.
Well, thank you guys. Enjoy the rest of your afternoon.
All right. So again, we'll hang back for a bit, but that's what we had for you guys today. You guys have a great week.
Thanks, Christopher.
Absolutely.
Yeah, thank you.
Nice seeing you, Anton.